Good morning, everybody. Welcome to the opening bell. Before we get started, remember the information we discuss in this video is opinion and should not be construed as advice in any way. A very, very warm welcome to everybody that's here with us. It's the last, or at least the last day of the month for April. And we are obviously at a very interesting point globally. We had the FOMC meeting last night with the US. Interest rates stayed the same, and the Fed is basically saying that they're not sure yet, so they're waiting. And if you look at it, if you just break that down in plain English, inflation is still a problem. Prices are still too high, especially because of the rising oil and energy costs. The Fed even changed its wording to say inflation is now elevated. That means it's worse than before. And if you really translate that, they're not comfortable cutting rates yet. And so there's a big disagreement inside the Fed. Four members disagreed. The biggest split since 1992. And some want higher rates to fight inflation, and others want cuts to help the economy. So there's no clear direction internally as of yet. The war and the oil are messing things up for them, according to what we are seeing. And conflict in the Middle East is pushing those prices up once again. You can see it on the screen. We had $111 per barrel, and that feeds directly into the narrative of inflation and the uncertainty. So external events are obviously blocking clear decisions, and the economy is okay, but it's very fragile. So growth is steady, but jobs are looking stable. But it's slowing down. And so it's not bad enough yet to cut the rates and not strong enough to ignore. So technically, we're seeing no difference in terms of what we've been experiencing for the past 2 months. The oil price in itself, the high that we had gone to last month was at around $115. We had $111 right now. So it's technically, we anticipate price to go back to that high at the beginning of May. But obviously, towards May coming down, maybe the second week or so, there could be some, the different movement there. And that's something that we want to encourage all our listeners and our, students with here, is that technically, if you look at it, from an annual basis before, price has been here. All right, this is 2001. It's also started here in 2018. So this area here, as well as there and here, it happened for 5 times now. And it managed to break out over here. There's 2022, and obviously here 2023. This movement was very powerful over here, and we managed to come down. Obviously, being at the COVID areas here, we saw some of that happen, but there was also some global tension happening at that time as well. And so we are now, for the second time, we've broken past a 2023 resistance, which actually was a net for us. So price went up, came down, and continued to, climb to the downside to around $59 per barrel. This was last year. We were sitting at $59 a barrel. Now, the following year, we have exponentially flown to $115. So at some point, we're going to have to correct here, all right? And that means that obviously we're going to have the same pattern. We're going to see when the oil price comes down, we're going to see a bit of a more strength in the euro. We're going to see some more buying of gold. The US 30, or at least the stock markets, will be going up again, even although there has been movement of the stock market going up now already, which is for different reasons. But we have been seeing the stock market annually, at least for this year. If you really look at it, all right, we have been pushing, to the upside. You can see it right over there. It's 2026. So we've been very bullish this year. And that's important for us to note, all right? So for different reasons there, we'll discuss some of those things next week. But this is a clear movement here. That price has pushed to the upside. We've had a correction. We could still be coming a little bit further down first because of the fragmental movement we're seeing in the oil price. So this is what we're looking at in April. We had a surge and a surge in movement, a rally, and this is a correction that's taking place now. It's already broken through, and we're anticipating 48,200 points or at least that level to be found or to be reached by the US 30. The guys can check out the S&P 500 as well. If you look at it from a daily perspective, this one is holding a bit more steady when you compare that to the US 30, because obviously it's different companies, different industry sectors that's within those indices. But what's important is also for you to know when the indice market moves in a very important trend, it normally finishes up. If it does not start the trend, it will not continue. So there has to be a start in the trend. And at this point in time, from a trend perspective, we have a big movement to the upside. Talking about the stock market now, because we already know what's happening with gold and what is happening with silver, and as well as the Euro USD and the oil market being the main driver. So at this point in time, from this low year 6,300 to 7,202, we're seeing a little bit of a structure that's being formed there. All right. So what's important, if I can just show you guys here, please watch the stock market very, very closely and do a bit of reading on what is happening with the reserves of the oil, meaning different countries that are experiencing a shortage, or that will come into a specific shortage. That is going to happen because obviously if the oil price does not become better, there's a lot of countries that cannot afford to buy the real value of oil at this particular moment in time. There's so much logistic cost that's attached to actually getting the oil. So the actual price of the oil is definitely not what we would see. But what's important for us to see is that when the oil price goes up, we're going to continue seeing the stock market come down fragmentally. We're not speaking the overall movement here. We're referring to what is happening during the intraday structures. Okay. So in this particular moment here, there is no trend that we can say has actually pushed to the downside yet. We have a low here, all right, that has formed at that peak there. So there is a low. However, we need a lower low, and therefore, when it comes to indices, we need a trend to start forming. Once you have a lower low, that is when it becomes imperative. Now, there is a lot of exhaustion at the top side, so we're anticipating it to come down a little bit more. That means the oil price will then go up. So we're anticipating it to come down. That's the first low. We're waiting for that low to be broken. And should we do that, we're going to come down a little bit further. I can show you a little bit more detail as to where we could possibly go. But obviously, this is all speculation. All right. It's all speculation. It is not necessarily something that we can look at as guaranteed. That's what we are trading at the moment. We are speculating in derivatives. All right. So if we look at it from this angle here, there is if the oil price continues to rally as we're seeing now, we will then see the price possibly come back to 6,953. And now that's going to be a very interesting one there for us. Let me actually take this off so you don't get confused. So 6,953, if we can get another lower low, that is where we're anticipating. But please remember, guys, with the interest rates not being cut, it's unchanged. We are expecting, if the Fed does raise the rates instead, so if the oil price goes up and those rates are hiked, then we're going to see a lot of movement in terms of dollar strength, and the stock market comes down because we're going to have a much stronger dollar. So it's not going to be worthwhile for investors to actually get into the stock market. They're rather going to go to the bonds and so forth to actually get a better return on investment, and therefore we'll see a bit of a downside coming here with the stock market. At this point in time, it is consolidating. It's created one low in that consolidation, but nothing as yet to break through. The US 30 has gone ahead, like I said, but that's about it at this point in time. So watch the Euro USD carefully. We're experiencing some corrections today. Just watch out for the 117 level. There's a very, very high chance that we could get close to correcting to that area there. We might just hit the 117.08 and then it possibly turn back down again. The great thing about FX is it respects resistance levels very well. So we could get a spike possibly going up till there. Remember, this is all in lieu of the oil price going up. So we're expecting some dollar strength to still come in. All right. So watch the Euro USD very carefully. Watch the gold very carefully. Some corrections here. But with the oil price going up, we could see oil coming down once again to 4,300 and around 4,349, roughly that low over there. That's going to be important for us to watch. All right, but that's it from us, the opening bell. We encourage you, please, guys, do a lot of research on your side. Go and check what's happening in the markets. Make sure you don't only focus on the oil price. What's happening behind the oil price? What is happening from a global order perspective? Who are the players? And what are they aiming to do? All right, the transfer of wealth, de-dollarization is another conversation. You can go and check it. Please make sure you do a lot of research to stay up to date with what's happening around the world. And we'll see you guys in some of our classes. We also have the trading room at 2 o'clock this afternoon. See you guys very soon. Have a good one. I'm Ashley Reeve here. And if you've not signed up with us, guys, www.tdmarkets.com. You can also email care@tdmarkets.com. Have a good one. I'm checking out. I'm Ashley Reeve. Ciao, ciao.